Rome in 284 AD, Spain in 607, the Netherlands in 1815, and Britain in 1931 all saw gold and silver prices triple just a few years before their economies reset. And now it has happened again. But today, the story is even stranger. When silver triples, the system resets, and you are living in that moment right now, even if it does not feel real, and even if everyone around you is acting like nothing has changed. This is the first sign that something huge has started, and you need to understand why it matters to you. The price of silver going from the low 20s to the mid-70s may look like a normal market rally, but it is never just that. A big jump in precious metals is not random. It is a warning signal. It is like a flare in the sky telling you that trust in the currency is weakening, that the financial system is starting to crack, and that a reset is already happening long before most people realize it. People who understand these signals quietly prepare, while everyone else keeps living their normal lives, thinking nothing is wrong. When you look at history and see sudden spikes in gold and silver, you are not just looking at charts. You are watching fear turn into action. You are watching the economy show what it really is, a big system that runs on trust. And when that trust breaks, the system resets. That is why every time money becomes unstable, gold and silver rise first, long before everyday prices go up and long before the media starts using words like crisis or collapse. But today there is something new, something that makes this moment different from the resets of the past. Because this time the financial system is built on an unprecedented mountain of debt. And this time the movements are faster, sharper, and more aggressive than anything recorded in modern data. Investors know this, and that is why they are rushing into metals in a way that almost looks desperate. If you pay close attention, you can feel that urgency. Look at how the total debt in the system has ballooned, both private and government debt combined, stretching far beyond the actual productive capacity of the economy. Debt used to rise in cycles. Today, it rises like a straight line heading toward a point where repayment becomes mathematically impossible. No one wants to say it out loud, but you can see it if you pay attention. When the burden grows so large that the only way out is to devalue the currency, the people who recognize this early run toward assets that cannot be printed, and silver becomes one of the clearest signals that the reset clock has started ticking. To understand why this moment feels different, you only need to look at how the owners of the debt have changed after the financial crisis. Households slowly reduced their share of the debt while the government absorbed it like a sponge, raising its own obligations to levels that would have been unthinkable a generation ago. And when you overlay this with the movement of precious metals, you immediately see the connection. Investors understand that a government can delay a crisis by printing money, but it cannot avoid the consequences forever. And so the metals begin their climb, announcing what comes next before anyone else sees it. Silver is especially powerful because it behaves like a monetary metal and an industrial metal at the same time, meaning it reacts not only to fear but also to structural shortages and real-world demand that cannot simply be manufactured. When silver triples, you are not looking at a one-dimensional signal. You are looking at a system-wide alarm telling you that currency confidence, supply constraints, and monetary pressure have collided all at once, and that the next stage will not be slow. This is why the reset narrative grows stronger. Every time silver enters one of these parabolic phases, it shows you how quickly sentiment can change. One moment the market looks calm, and the next moment people begin to realize that the dollars they hold may not buy tomorrow what they buy today. And once that idea spreads, the reset accelerates because the psychology of money changes. Money only works when people believe in it, and precious metals only surge when that belief begins to fracture. But here is the part that creates real fear and real opportunity. The rest of the economy has not yet reacted. When you look at the price of oil or natural gas or wheat or housing, you do not yet see the explosion you might expect from a currency losing its footing. That is the strange part. That is the eerie calm before everything shifts. It tells you that the divergence is not permanent but delayed, and that we are in the early stage of the reset where only the people paying close attention understand what is happening. This delay is caused by something called velocity of money, the measurement of how fast each dollar moves through the economy. For years, velocity has been historically low, meaning money sits rather than flows. It gets trapped in financial assets instead of circulating through the real world. But during a true currency breakdown, velocity flips. It accelerates rapidly because people want to get rid of their currency faster than it loses value. And that is when the reset becomes visible to everyone. That is when prices for everything begin to rise, not slowly, but relentlessly. Today, we are standing at the border between those two worlds. The world of quiet signals and the world of visible consequences. Silver has already spoken. Silver has already told you that confidence has cracked. But the public has not reacted yet, because the floodgates of velocity are still closed. And so we remain in that narrow window where only a few people understand the magnitude of what is coming. You are in that window right now, and the question is whether you will act while time still exists. Think about how wealth shifts during resets, because this is not just a story about metals or charts. It is about survival and opportunity. During every historical reset, wealth moved violently from those who trusted the currency to those who anticipated the devaluation early and positioned themselves accordingly. That is why these moments create new winners and erase old ones. The system is built on confidence, and when that confidence breaks, ownership of real assets determines who walks away stronger. This is why the people who study these cycles do not watch the headlines. They watch the signals. They watch the metals. They watch the velocity. They watch the debt structure. They look for divergences between financial assets and real-world pricing. They look for the moment when the money held in stocks begins to leak back into the real economy, unlocking the supply of dormant dollars that then push prices of everyday goods higher. And once that happens, the reset accelerates, because the confidence spiral becomes unstoppable. So what does it mean for you now? It means you cannot ignore the signals that are already here. Silver tripling is not an accident. It is not a temporary anomaly. It is a structural change. A message from the market telling you that the currency you use every day is entering a new phase. And that the system built around that currency will feel the pressure soon, once velocity rises and financial assets begin to unwind. In the coming days, you will hear many experts say that everything is under control. But resets do not come with announcements. They happen slowly, through small changes that only seem obvious later. This is your chance to understand what most people will only realize after it is too late, and to act with calm thinking instead of fear. The signals are already here. The patterns are repeating. And the move in silver is the strongest warning you will see. Use this moment to strengthen your position, learn what is really happening, and prepare for a future that may look very different from today. Stay alert and take action before this window closes. Subscribe and I'll see you soon.